In this video, I'm going to talk about what an asset is. So the technical definition of an asset is that it's something with probable future economic benefit that was obtained or controlled by an entity, for example, your business. If you started a business, that's the entity we're talking about, as a result of a past transaction or event that took place. So the key here is probable future economic benefit. Notice that it doesn't even have to be certain future economic benefit. So let me give some examples here. So for example, one type of asset is accounts receivable. So that's money that is owed to you. You made a sale, the people didn't pay cash, and you're waiting to receive payment. So we know that it's not 100% guaranteed that you're going to receive this. But even if we just think it's probable, we can go ahead and record this as an asset. Now we'll go ahead and make an estimate of how much we think we won't collect and so forth. But even though it's not certain, it is probable, and we can recognize this on our balance sheet as an asset. So it doesn't have to be guaranteed. So let's talk about some types of assets. So we've got, if you look at a balance sheet, you'll typically see it organized where you have something called current assets, which includes cash, accounts receivable, short-term investments, and things like that, inventory. These are all things that are expected to be converted. They either are cash to begin with, as in this case, or these things are expected to be converted to cash within the next year or the length of the operating cycle, whichever is longer. So basically, these are liquid things relative to the other types of assets, which we have long-term investments, which won't necessarily be expected to turn into cash in the next year or so. We have property, plant, and equipment, buildings, trucks, vehicles that are used, machines possibly. So then we also have something called intangibles, trademarks, patents, things that you can't quite put your hand on and touch, but are assets. They have that probable future economic benefit nonetheless. And then you also see something called other when we think of assets. And other assets could mean a lot of things for different firms. It could be something like a deferred tax asset or something. So these are the types of assets that you would see on your balance sheet. And an asset, remember, is anything with probable future economic benefit, something that at some point in the future you'll get some benefit from, right? You have a machine, ostensibly you're going to use this machine at some point to make money. It has future economic benefit, and you have to control this or have obtained it or own it or something like that. You somehow control or own this object, the machine, for example, as a result of a past transaction or an event. That's what an asset is.